this out on Twitter. Going here. What's up, Carlos? How you doing? Just getting this out, getting the link out to folks. Giving people a chance to get in here. How's my audio? Leo, Tyler, E. What's up, guys? Get this going here in just a moment. Excellent. Live and learn. Cohen. Roman. Meditation Minute. What's up, friends? I'll give a few more people a chance to show up, and then we'll fire off an intro, and we'll start looking at some charts and things. Hope everyone's having a good week so far. What's today? Wednesday? Yeah, Wednesday, February 9th. Good morning from Alaska. What's up, Josh? Nacho, Travis, all of the homies. I have slow mode on in the chat. It's like 5 seconds. If for some reason that's like way more annoying than I thought it would be, then just let me know and I can reduce it. I just didn't want chat to go too fast. It's hard to keep up with when that happens. Hello from Poland. What's up, everyone? Hello from Texas today. That's where I am. Central Texas. Argentina. Excellent. From the Midwest. Do I teach? Well, my channel is my version of teaching, Kumar. What's up, Trade Talk? Hope everyone's having a good day. Tyler Durden swallowed the red pill. What's up, my dude? Got a couple Tylers in here. Austin, hello. Next door in New Mexico. Cool. London. What's up, John FX? London's a great city. I went to London and the Netherlands many years ago. I have not had an opportunity to go back yet, but I would love to. I was in London and Brussels and Amsterdam in 2003. I was in that area for about a month, and it was wonderful. Dublin, beautiful. From Minnesota, New York City. What's up, John? Hello, Calvin. Mr. Dave Lashinsky, hello, sir. MKL, I don't know if that's Mikhail, Michael, MKL. We'll call you MKL. Beatcoin, what's up? Karthik. Burke, hello, everyone. All right. What we're going to do now is fire off an intro. First, here I am, right? Down in the corner. Everyone can see the cam, right? Is that working? Let me know if the camera is working. I'm making sure my software is functional here. I know this is very high tech. Hi from Zagreb. Wow. Santiago, Chile. From Canada, from Budapest, Istanbul, Philly. Got people all over the place. All right. I'll put my headphones on so I can hear the music here so I can give you all a proper intro. Ready? Here we go. Hello. Welcome back, friends, to Alpha Beta Soup Live, where we unpack Bitcoin and whatever we feel like using on-chain analysis and various tools. I'm TXMC, and we are live. Sean, hello, sir. Frederic, and Kirash, Vostro, Patrick, all kinds of people in there. Sir, what will the Putin candle look like? Are we already calling it the Putin candle? Oh, God. All right. let's go look at Bitcoin first. Let's start with Bitcoin. Let's start with a 3-day chart. Not look at anything else yet. Let's just see what the price is doing. Arnaud, hello. Sven, hello everyone. So before I start talking about Bitcoin, a couple of little things. So I don't really have a big agenda today. I didn't have a long list of charts I wanted to show you. There's a few things I was looking at before the stream, but I figured we'd look at the markets a little bit together and figure it out. If there are things that I see, I'm going to talk about them. But if there are questions that come up in the chat about things we've looked at in previous videos or what's going on with Bitcoin, I'm happy to do that. I'm happy to talk about whatever, and we can just kind of hang out for a little while, maybe an hour and a half, something like that. Just realized the TX and TXMC stands for Texas. It kind of does, yeah. My initials aren't MC, so if you're trying to like decipher all of that, but it's just a pseudonym, you know. Any chance you'll cover alternative crypto assets like F-Matic, etc.? Maybe that's F Classic. So right now, my vision for this channel is to be mostly Bitcoin focused. I do look at other assets, and maybe some of these live streams, we can occasionally look at some of those things, but right now, at this stage with my channel, I'm not yet ready to commit to covering more of crypto than just Bitcoin. I find Bitcoin to be the most fascinating, and the depth of the on-chain metrics for Bitcoin are unparalleled. No other asset has them like that. Ethereum has some of it. Litecoin has even less. And then as you get further down the coin market cap list, the ability to forensically look at the chain or the ledger or whatever accounting method for that asset is harder and harder. Alberta, Canada. Hello, Ryan. What's up, everyone? Chris, Quentin, BCB. Hey, what's going on, everybody? Arnaud's in the house. Live and learn. Patrick, what's my educational background? I don't have one. I'm just a dude on the internet. Shadow Knight, second live stream. Glad you're feeling comfy. Yeah, man, these are cool. I have a lot of fun doing these. They're a little less prep work. You know, when I make a video, it takes hours, and Blockchain Backer can probably speak to this. It takes hours to make a good video. You know, there's a bunch of prep, getting ready, deciding what you want to talk about. The day before, you're thinking about what you want to talk about. And then there's the packaging of it, getting it all in order, making sure it sounds good, editing the video, all that stuff that goes into it. It's a multi-hour, like sometimes half-a-day process, depending on how big the video is. So these live streams, far less prep, much more fluid. We just kind of, I make sure everything's open, and then we go live. So it's less work and a little more personal. All right. Well, it's been kind of interesting. We've been kind of in up-only mode for the last few days. And, you know, it's hilarious how fast sentiment changes on Twitter. No button for you to donate. I don't know how to turn that on, dude. I'm on it. I thought I had that turned on, but I don't know. Is there something I'm supposed to do? I don't know how to enable those things. But what was I looking at? Sorry, we were looking at Bitcoin. I don't know. I had I turned on ads and things. I thought that was what I needed to do. So, not sure about my guy. I'm not sure the way I'm supposed to turn it on. My background is now masters in on-chain data analysis, Bitcoin fundamentals, and engineering. Engineering's a stretch, but I really appreciate the compliment, Patrick. Yeah, the stream will be available to watch after it's over. YouTube records all these things. You know, it's just been kind of interesting the last few days, just like how quickly sentiment on Twitter has reversed, and it's now incredibly bullish. I mean, we're, 38% or so off of the wick lows, which is pretty good, and it's been multiple days now of pretty much up only. But I'm not yet ready to get super excited. I don't necessarily think that this means we're going to the moon, but that's what a lot of people's bias is. So usually we start seeing some strength and then sentiment starts changing real fast. And I think that this area for price right here is probably going to be a little tough to get through, this area right here. I foresee a lot of chop here. There's a lot of weekly supply in this area dating back to this period here. We also have 50,000 in here somewhere. That's not where it is. It's right here. There's also, I think, the 200-day moving average in here. Yep. The 50-week moving average. Yep, is in here. There's a lot of resistance in this high 40s area. There's another indicator that I look at sometimes here that my friend Permeable Nino created. And these are based on 50% price retraces of different time periods. Got the 30-day right here, the 90-day in green, the 360-day in red, and the 720-day in yellow. And what these are the 50%. It's the median between the price range of that time period. So this green one is 90 days. This is exactly the halfway mark between the 90-day range of price. The interesting thing about these indicators is that price kind of magnetizes to them at times. There's a lot of factors that go into price action, but if you're just looking for things that are pretty reliable, there's a couple of moving averages that you could maybe look at. But I find these retraces to be pretty interesting, particularly the 30-day, this blue one. There's been really strong rallies that have been supported above the 50% median of price for the last 30 days. You can also see it's not perfect, right? But the low of June and July was pretty much where the 720-day mark was, and that's also what caught support here. So I think these is pretty interesting. Go to YouTube Studio, scroll down to monetization, and then go to supers. Okay, I'll do that, guys. I don't actually... I'm a complete pleb when it comes to this stuff. I see. Let me turn that on for you guys. I know that not everyone on this channel is super excited about this, but I'll turn it on here. Alpha beta soup. So, in terms of, there we go, super chats, turned them on. Cool. In terms of price action, I know that there are a lot of people out there with some different various price targets. I don't have price targets. I'm just kind of watch market structure and momentum. That's what I'm interested in. I'm not trading Bitcoin. I have like a long-term stash. And I often get asked why I even make videos if I'm not trading this stuff, why I'm talking about price so much. And I'm truly just like a student of markets, and I'm just fascinated by the outcomes of all of these people investing in this asset, making decisions at different points in time with their own biases and, personal interests and goals. And they're all kind of merging together to create these price outcomes. And I don't know, I find this stuff fascinating. Let me catch up with chat here. It's going pretty fast. Let's see. Why say remarks for Bitcoin maxis constantly that don't apply to 99% of the market? Watch other coins. They're doing 2 to 3 times more stuff than Bitcoin. Bastian, if that's what you're interested in, then look at those things, my dude. Everyone is getting something different out of the market. Not everyone is sitting down in front of the price chart each day trying to maximize their gains. Like some people are just trying to make sure that they have peace of mind in their long-term portfolio. Some people just want reassurance that what's going on in the market right now is something that has happened before, and we can expect that this will eventually clear up and become positive again. Like, there's a lot of people seeking different types of information and insight from looking at the market. Not everyone is trying to find the thing that's running today. And when it comes to the crypto space, Bitcoin drives everything. And as long as Bitcoin is doing well, the crypto ecosphere will continue to do well because it's the king and it's the reason everything else is here. So that's why I focus the most on it. I think that other coins at times can be interesting, but they're not as intriguing to me as the core asset. BCB, first donation. Thanks a lot, man. Really, you're too kind. You don't have to donate, but I greatly appreciate that. Your content and work is very inspirational to me. Thanks a lot. Thank you for that. So let me see here. Who's got a couple of questions? What makes you choose Coinbase for my charting as opposed to something like Binance or Bitfinex? That's a good question. I use Coinbase because it is the largest volume spot exchange in the Western Hemisphere. That's why I use it. I have a Coinbase account. You know, when I buy spot Bitcoin, I buy it on Coinbase Pro, which I'm not recommending that you use. I have just had an account with them for literally forever, and that's just who I use. So I use Coinbase because of their high volume, because they have the highest reserves of Bitcoin amongst all exchanges. And so they're like my spot index. Got a couple other donations. Chris Princer donated. I'm your second. Thanks, buddy. I appreciate that. Stake Profit. If we paid for a cheaper Glassnode plan, can we create all the metrics you use with Tableau in the API? You can create metrics using the tier 2 metrics that you would get with the less expensive plan with Glassnode. I'm pretty sure that the API works for the tier 2 class. Thank you for the donation, Stake. I really appreciate it. Thank you, Guy, for the donation. Thank you, guys. And before anyone does, I would like to request that you please do not send me a donation to ask for a price target on some other coin or something. That's not what I do on my channel, and please save your money. But I thank you. I'm very grateful. You guys don't have to donate. I get enjoyment out of making this content and seeing that it has value to you. All right. Who wanted to see my trading view settings? And when you say my settings, I'm not really sure what it is that you're asking about. If you're asking about my color scheme, these are my colors from my logo that I just put in here into my setup for my candles, if that's what you're asking about. I have some indicators that I use. Sometimes they show up on my pictures. Sometimes they don't. Here, I'll show you a few of them here. So let me hide this one. Not all of these indicators are for price. You know, some of these are futures health. And the ones that I have on the screen right now have shown up in a few of my tweets lately. And these are indicators related to the balance between the various futures exchanges that sell perpetual swaps and the balance of volume between those exchanges and the big spot exchanges where people buy physical Bitcoin. So I have a couple of indicators that I don't use to trade with, but they help to guide my general kind of diagnosis of market health. Like if I zoom out here and I show you, I can break this indicator down a little bit. I've actually been asked quite a bit about this, so I'll explain a little bit about how these are. So I wrote all of these in TradingView with PineScript, which is like their built-in coding language. And I did that by finding someone else who had built an indicator, who shared it publicly, and literally just ripping their code and making it my own. But this one here, and morphing it to be what I needed it to be. This top thing is a spread of all the futures markets. I use Coinbase as my spot index because for the reasons I explained a few minutes ago. And Coinbase is in white. And you can see over on the right here, I've got a bunch of exchanges listed with some numbers next to them. So it's comparing the Coinbase price to the current futures price on all these different exchanges for their Bitcoin perpetual swap. And as we've talked about in the past, the perpetual swaps are governed by the funding rate, which is what we look at on our derivatives dashboard, and we can go check that out here in a few minutes. But they all trade at their own price. And the funding rate is what helps to incentivize that market to keep the futures price close to the spot index. So the futures price is always wanting to move back towards the spot price, which I'm using Coinbase to represent on this script here. But because of various market forces, both in spot and in futures, those prices can deviate. And it can be for a number of reasons. But what I see on my screen here are these other exchanges and what their current price is compared to Coinbase. And the Coinbase number is its price compared to the average of all of these. So that's what you look at when you see this. And right now, what it's showing me is that Coinbase is currently about $30 ahead of the average of these 5 futures exchanges that I look at, which are the 5 that I think are the most important: Binance, BitMEX, Bitfinex, Bybit, and FTX. Roman, wow, thank you for the donation, sir. All the best to you, TXMC. Thanks for your hard work. Thanks for your work. I greatly appreciate you. Thank you, John, as well. You guys are too generous. Thank you very much. Do you think we're going to a retrace, or are you considering an option of Bitcoin going up to 48K and then creating a range that breaks to 23K? Yeah, so right now, my general expectation is that we're in a retrace rally, that we are not fully capitulated and back in a bull market run like over the next couple of months. That's not my base case. If I continue to see, if I see like a lot of spot strength, if there's a lot of volumes increasing for physical Bitcoin demand, that will affect my expectation. But right now, with everything we've seen the last few months, with the fact that we made an all-time high without the kind of bull market activity on chain that we normally have, my base case hasn't changed. So right now, I expect that we are in a retrace rally. And what those look like, they can go very high or they can not. If I pull up a daily chart, here's a daily chart. Let me clear all this stuff off. If I just throw a fib on here, it's the wrong fib. If I just throw a fib on here, I mean, like, there's a lot of places where a rally can stall out. People who watch Blockchain Backer are probably familiar with some of these levels here on the retrace rally. There's places that it is historically likely to reach an end, and those are right underneath 60K in the high mid 50s. But it doesn't have to go this high to complete a retrace rally and come lower. My base case has been, actually for a while now, that we would test this region down here, and we never really did. We kind of got front run a bit. So because of the profile on chain, because of the low amount of activity that we're seeing, just kind of broadly, and the macro situation being such a clown show, it's hard to confidently just lay all my chips on the table and say Bitcoin's in another bull run here. It doesn't look like one. It looks like a relief rally. That's kind of where I'm at right now. I was explaining these metrics. So yeah, this appears just like my futures basis. And what I've noticed really for the last little while here is that, so this red line is Binance. I kind of broke it out by itself because Binance is far and away the biggest futures market for Bitcoin. It's not CME. People want it to be CME, the Chicago Mercantile Exchange, because it's been around forever, and people assume that that's where all the big boys are. And some legacy people are there. But in terms of market size, Bitcoin transacted per day, dollars moved on, per day in that market, Binance Futures is the king. So I have them kind of broken out here. And what's been pretty interesting here, I'll actually disable some of these other ones so you can see it more clearly. Here's just Binance and Coinbase. And if you look here at the bottom of the rally, Binance was kind of left behind by Coinbase. You can see Coinbase was trading above the break even and Binance was down below. And this is just one data point, but things of this nature, plus this rising metric here, which I've called spot dominance, which is showing you volume on spot markets rising relative to volume on perp futures markets when it's going up, seeing this rising, seeing the Binance premium here falling negative. It really showed that right here, this was kind of a spot driven lead off in this part of the rally right here in a way. And then once we got up near the top, spot really actually got left behind and Binance started trading well above Coinbase's price. When that happens, that's a concern for me because that means that futures is being more aggressive or Coinbase, in this case, spot markets are selling off. That's one of the two things. Neither of those are good. So when I see a complete inversion here, it kind of would give me pause. Now, I didn't have this indicator written back here in October and beginning of November, or I would have seen this dynamic playing out. But I've been studying it recently, and it's something I'm going to be watching for in the next rally. What if we do a massive head and shoulders with the two prior peaks? That's a doom scenario, Diamond Dragon. I'm not sure. Okay, Swiss donated. Don't ever change your intro, TXMC. I don't think I will. Sandy also donated. Appreciate your work. Thank you very much, folks. Really appreciate it. Chris popping in to say hi. Thanks for all your great work. Thank you. Fed tightening narrative has been priced in. I think we go up until March or April. Doubt we break an all-time high. That's kind of my base case. I think the market has priced in a lot of the tightening. You know, there haven't been very many surprises in the last couple of weeks. Now, if the CPI report comes out tomorrow and it's suddenly reversing, if it starts pulling back, the markets will have to adjust to that. I think people are expecting an even higher print. People are expecting like 7.3%, which is above what we just got. So the markets have priced in a lot of this mess. And it's possible that's why it's possible this relief rally here that we're talking about could have some legs because of that. But I'm not ready to, I'm not at any point in my analysis where I feel like this right here is the start of like some new massive bull run for Bitcoin. I don't think it's starting right here, right now. Could you explain legacy better? Yes. So when I said legacy a few minutes ago, I was talking about traditional finance players on the Chicago Mercantile Exchange who have thus far in history been cold to crypto. People in traditional markets trading traditional instruments under the blanket of SEC regulation. Legacy finance, traditional finance. Low activity is concerning to me also. Yeah, it is concerning to me. I'll show you some of the low activity I'm talking about here in just a minute. I just kind of wanted to finish explaining these indicators real quick for anyone who actually gave a damn. So I explained this futures spread here, and I picked these BitMEX, Bitfinex, Bybit, and FTX because these four exchanges make up the most of the activity in futures. I saw someone had a question about it just a moment ago. What data source are you using for the perp futures indicator? Jay, it's in TradingView. So it's literally just the prices of like Binance, BTC, USD. You know, like that's, you can just type that in and you can, and I'm using those instruments. Yeah, I have them all here. Coinbase, FTX, BitMEX, Binance, FTX. That's what I use on here. When I have my charts in Tableau that I have not in TradingView, I'm pulling Glassnode, and they're aggregating data from all the exchanges. They have APIs for all the exchanges. If BCB is correct, a 702 will create a huge head and shoulders. Yeah, so far I think Blockchain Backer, I think his thesis is correct so far. I haven't seen anything that has invalidated it personally. That, you know, this is probably the top for a while. I don't know. The thing that I'm different on with BCB right now is that I am not anticipating this being the top of what will now lead to a multi-year bear market. I feel I haven't yet been able to merge that thesis with some of the other things that I'm seeing yet. I can't refute his thesis, but I also am not seeing a lot of, there's some things that I see that don't have confluence with that, and they relate to some of the on-chain evolution of Bitcoin in the last 2 to 3 years, and how I think that that will affect how future market cycles play out for Bitcoin. But I don't think that it's going to have these insane parabolas and then multi-year bears. I don't think that's going to play out over and over. All right, so let me finish explaining here. I have a little bit of ADD, so like I'll start explaining something and then I'll look at the chat and get completely distracted. So please bear with me. I am only human. This blue metric that I have down here at the bottom, I've been asked about this a few times. This is literally just a ratio between the volume in the top 3 biggest spot markets. I think I use Coinbase, Binance, and FTX, compared to the volume on the 4 biggest perpetual futures. I think I use Binance, Bybit, FTX, and Bitfinex. And it's just a ratio. And I just did that so that I can see when spot volume is rising relative to perps, or when perps volume is rising relative to spot. The actual value on the axis over here for this blue line doesn't matter to me. It's the directionality of it, right? And so, kind of interestingly here, when the line is going up, that means that spot volume is rising relative to futures. And if you see after September's wipeout here, this was the day that El Salvador made Bitcoin legal tender. We had this big wipeout. We've talked about this on the channel. And from this moment on, all the way up until we got close to the all-time high, spot started leading the rally a bit. Or in a sense, its volume was growing faster than that of futures. So you could say in a way it's trying to lead the rally. And while this was occurring, Binance was seeing its premium fall negative. You can see that right here. I know it's red while the line is red. Maybe that's not that clear. But when we got up to this point in the market here, right before the actual all-time high, spot volume started receding. And partly, this is because right in here was when the BITO futures ETF launched. And so we actually went through a period of time where spot was not really dominating. And there's a lot of futures volume in this area right here, but then it started falling off. CME futures had a really big couple of weeks, and then it just kind of fell back down into the pack like everything else, and Binance actually surpassed them. But after this few weeks of kind of chopping around in here, we started to see spot rising again into this kind of weakness. And now it's been kind of going sideways. And if I get more micro with it, it's on a moving average, so I can really zoom in with it. And you can see moments where it's receding relative to the market. Like here, this is going down while this is going sideways. And this, I think, is just spot is becoming uninterested in sideways price action, but perpetual volumes have stayed high. And it's just people filling in positions during this sideways action right here. And so that's just kind of how I look at this line. It's just, I use all 3 of these in conjunction. And down here at the bottom, it's both the volumes together. So these 2 lines create this ratio. Under what circumstances do I see a new bull run? Okay, well, supply is very tight. One thing that's been great for Bitcoin, and let's go look at some on-chain stuff real quick. One thing that's been great for Bitcoin is that long-term holder supply has distributed very little in this second half of last year compared to where they have in the past. Supply dynamics have remained very tight. And their distribution up here, which I can show on a different chart, was minimal. I think I've shown this on the channel before a couple of times. I'll show you here in my workbook. So this is long-term holder spending, right? Let me change it to 14 days. And let me zoom in just a little bit. So you see this orange right over here and right here. This is the spending, not this one, sorry, this right here. This is the spending of long-term holders at the all-time high. Here's the all-time high in October, November. Here's their spending on a 14-day basis. This is the percentage of their supply that was spent out of that group. And if you look at this relative to their spending at the all-time high break at the beginning of 2021, look at this. This goes all the way down to 3.5%. They were spending on a 2-week basis multiple percentage points of their supply. And this persisted for several weeks. This persisted from October all the way until, middle of March. So they had this massive spending out of this group. And they've even done that in other peaks. This is the 2019 middle year peak after we had the Plus token Ponzi and some other things that there was some spending out of this group here before we got into the 2020 and all the COVID mess. But the spending out of long-term holders up here at this top was very minimal. And I think part of that is because they didn't get a lot of time to reset. There wasn't a lot of time between these peaks. This was really a unique situation for Bitcoin. It's had these double peaks before, but when it did it in 2013, it was a very different market. it was mostly amateur investors and home miners and just pure traders, right? There was no institutional money at that point. It was people getting rich for the first time, seeing fuck you money for the first time in their lives. And that market was very different, and there was extremely high spending back then. Let me go look. Let me show you. Takes a moment for my chart to load. Yeah. So here's the 2013, 2014 double pump. This is a part where the people often refer to in the current market. Oh, we're doing this again. And I've even been guilty of that. Like, maybe this is what we're doing. Maybe we're doing this again. But even so, look at the amount of spending out of long-term holders in these periods. I mean, it comes all the way down here to 6-7% of supply, 5% of supply. And this little blip up here was their spending this last all-time high break. I mean, it's nowhere near it. It's nowhere near the amount of spending they had 6 months prior to this. So supply has remained very tight. That is a positive. But what I think Bitcoiners, maxis in particular, fail to always factor into their near-term expectations is that the majority of the world still sees it as the premier risk-on asset. Right? Despite its actual design being risk off by nature at maturity, it isn't yet at maturity. And most people see it as an extremely risky bet because of its price volatility in the short term. And so those things, I think, are things that Bitcoin will have to surmount before it is able to see, at this stage of its development, with all this institutional money coming in, it needs to have more people understand that it is a risk-off asset, that it is a hard money, store of value, long-term savings mechanism type of asset. And until we get to that point, it's treated as risk-on. And now that we have institutional money here, those players behave in a very specific way with risk assets. And so that's why we're seeing a higher and higher correlation to the S&P. And so in the past, Bitcoin did a lot of these things kind of, regardless of what the greater market was doing, because this was extremely early on. But basically, since kind of this period in here, really 2017, 2018, since this period onwards, the asset has evolved. And I think that it's tied in very many ways to what's going on in the macro picture right now. And we have to factor those things in. We can't just assume that because long-term holders aren't spending, the Bitcoin number will go up. People have to actually want to physically own Bitcoin, the asset, and then take it off of an exchange and not sell it. That's the way we get a bull run. And we're not seeing that kind of activity right now. Catch up with the chat a little bit here. Is retail considered in or out? Right now, live and learn, there is no retail here. Let me show you one of the ways that I can kind of get a feel for quote unquote retail. Okay? Retail is hard to measure. I get asked this quite a bit. And retail means a lot of things to a lot of people. For me, when I say retail, I usually mean it in the context of network activity, of new people showing up that weren't here a week ago, excited to buy Bitcoin. And when you get that in mass, you get rises in network activity. This is active entities. This line here, these thing at the bottom here are active network participants on chain. Okay? The gray line in the back is the 30-day moving average. This blue line is right now the 365-day moving average. So we're looking at a monthly active entities compared to the yearly average. Now up here on the top on the price chart, these colored bars represent when the activity value is above the moving average. Okay, so it's really easy to visualize down here. Okay, active entities on a 30-day basis are above their yearly average. This is printing blue. And you can see it happens a lot in bull runs, right? In rallies, and then even for a period of time afterwards as the moving average kind of resets. There's some time around the peaks where there's extremely elevated activity. It happened here in 2020. Look at that. And it really stopped printing about 2 weeks after the Coinbase direct listing. It wasn't even May yet, and this value stopped printing. If I had this chart a year ago, I would have been screaming at all of you, this doesn't look good. We're sitting here at 50K and network activity is falling off a cliff. I've been beating this drum on Twitter for the last like 3 or 4 months now. And I think I'm one of the first people that really pointed this out, how precipitously activity fell off at the beginning of 2021. And you can see it's never come back. Look at this. Look at all the white. We created all-time highs without this printing. Here's the monthly activity. Never really got back to the yearly average, even though the yearly average itself is declining from its highs. The 30-day average of activity at the all-time high in October was similar to this level back here in July of 2020, back here in this part of the market, was roughly when we had a similar amount of people active on the network. So this is one of the key ways to identify when activity is growing. Active entities represents all types of market participants, buyers, sellers, new people, old people, meaning like new investors, old hodlers. All kinds of transactors are represented by active entities. We can also look at it in new entities, but it looks very similar because new entities is just one portion of active entities. So I just look at active entities and I use a 365-day versus the 30-day as a way of kind of showing near-term versus long-term. So this is one way to measure demand in a sense, or maybe demand isn't the right word. Interest is the word. Activity. Those are the words. So adoption creates evolution into macro. In a way, so live and learn. What I think Bitcoin is, it's in a phase right now where there is a percentage of people that understand its long-term goals. I consider myself one of those people. Maxis, for their part, are some of those people. And a lot of people who don't consider themselves maxis but understand Bitcoin, they're in that camp. But then there are the vast majority of people who are only owning it right now for gains, right? They're in it for the memes, for the gains, because their neighbor told them they could get rich, whatever, right? The same reason people bought GME 2 years ago, or a year ago now. Wow, it's only been a year since the GME mess, since the GameStop mess. Wow. So Bitcoin's in that phase right now, but there will be a point, I think, in the next few years. We're already seeing the machinations of it because institutional money, sovereign nations, people in politics, people in government, they're starting to recognize their inability to really corral Bitcoin. Like the SEC could ban it, but all it would do would force Bitcoin out of the United States. It wouldn't kill it. They know that they can't kill it. It's a hydra. So they can either accept it and learn to live with it, or they can resist it until it eats them alive. And I think that they'll choose the former eventually. And I think that we're going to reach a point in a few years from now. I'm not going to say it's in 2 or 3 years. I think it probably takes the rest of this decade, where it's several trillions of dollars. And as it gets to be that size, it will behave differently. It will not look like this anymore. It will continue. It will have narrower ranges. They'll be more tied to people's general expectations of economic growth. And that's okay. In my opinion, that's the way it should be. Why? Because Bitcoin is money. How much do you think altcoins have to do with it and taking Bitcoin market share? I don't think they have very much to do with it. I don't think that the crypto space is a zero-sum game. I don't look at the Bitcoin dominance chart because I don't think it's a reasonable comparison. There's Bitcoin, which is a hard money asset. And then there are all of these crypto tokens that are attached to various technologies and projects and services that are attempting to solve a number of things. Some of them are solutions looking for a problem, and they won't last. Some of them may have legitimate use cases that endure under their own name. And some of these technologies are trying things out that will be perceived as a value, but maybe in that current construction won't last, and those things will get adopted by the winners. So I think that crypto is here to stay. There's always going to be other coins coming up, people trying to monetize their project and creating a token economy to do that. There's going to be VCs who want to get paid they want to get their exit liquidity. So there's always going to be incentives to tokenize. We've now proven that it's extremely profitable to tokenize. That's never going away. But I think there will be a future where this space is more like a new world tech stock kind of ecosystem. Not exactly, but a new version of that. And that Bitcoin will kind of end up separating and doing its own thing and underpinning economic activity, because that's what its purpose is. Why do I think Bitcoin did an all-time high with decreasing demand and interest? Well, equities were pumping and derivatives were helping to drive it, in addition to a lack of spending. So low selling for an asset that has a latent passive demand at all times. Even when we have low activity right here, there is a constant dollar cost average demand on Bitcoin. Always. And it's growing over time. It isn't powerful enough to create bull runs, but it's powerful enough that when left to its own devices, number will creep up over time when sellers are exhausted. And I think that this rally in the second half of the year was driven by lack of spending. It was driven by equities pumping, and it was driven by the derivatives market really growing in 2021 a lot. What really catalyzed the bounce out of these lows here was a short squeeze. Right here in July, we got a really fat short squeeze right around where I'm shaking my cursor right here. Are significant increases of active entities possible from day to day after one positive news event? So they're possible in a way, but the reason I would caution against using entity-based metrics, which include long-term holder and short-term holder supply, those are entity-based metrics. Illiquid supply is an entity-based metric. All of those take time to bake in. They take some days. There's not a day limit on it, but they take some time to bake in for the algorithms to watch that address for other activity, to see if it matches certain profiles, to see if they can identify other address clusters they believe are related to it. It takes time for those things to play out. So I don't look at entity metrics of any kind on a daily basis. Active entities could, in the singular, shoot up on a given day. That's why I look at it with a moving average, because I'll show you what it looks like normally. It's a mess. I'll show you active entities. Here. This is active entities by itself. And you can see, like, there's days where it has big like singular spikes. I'll just zoom in on this market. See, this is what it looks like. It oscillates. So it's really hard to go, oh, see, this one day there's a big spike. This means XYZ, because it just oscillated right back down. You see? So that's why I slap a moving average on it and I zoom out. And then you can really see what it's doing. When would I use an aggregated view of the market versus looking at specific exchanges? Sometimes the entire market is in a consensus. Sometimes like the whole futures market is hella long. And in those instances, a specific exchange might not have as much of a signal, right? If we look at our derivatives dashboard that we have on our videos all the time. Let me look at the last year. Okay, let's go look at the second all-time high. This period right here, the market was giga long. I mean, in instances like this, I think that looking at aggregated funding is totally fine. I think you can get an idea here. Yes, there's clearly some aggressive longing going on here. We're at all-time highs and funding is clearly positive and sustaining positivity. While if we go back and look, where was this on here it is right here. while we had high open interest that was rising into the rally. So here, looking at it in the aggregated makes perfect sense. But there are other times where, let me zoom in back in on this. After the all-time high, when funding itself stops providing as much signal. There's some little pockets here where it goes negative, but it stopped providing a lot of signal, and it really stayed very tiny. I mean, let me actually break this out because I'm having trouble seeing it on this little dashboard element here. All right, so there's times, I'll answer your question in just a minute, DG. There's times here where funding is essentially giving you little to no signal. So this 0.1% right here is basically neutral funding. And when the funding rate is trapped for months at a time in this little box right here, you don't really get a lot of signal from it. And so that's when I go and I try to peel back the layers and I say, okay, which exchange has the biggest open interest right now? Well, it's Binance. Okay, well, let's look at Binance's funding rate. Wow, that's not very helpful at all. You can see their peg. You can see how it's pegged to 0.01%. You see that right there? That's why I'm always pointing out 0.01%, because this value is the default funding rate for Binance. And Binance has 30% of every dollar in futures right now. So their rules for how they govern futures are very relevant. One interpretation you can make that I'd like to add here, when you know that Binance's futures funding rate is pegged at 0.01% unless volume is high enough to drag it out of its little range, when you see it getting pulled down here, see how it's getting, there's almost like a gravity. Let me zoom in even more. There's almost like a gravity here. It wants to get up to this ceiling level. It wants to be here, but something keeps pulling it down, right? And when you see this getting pulled down right here, it means one of two things. It either means there are shorts opening positions pulling the funding rate down, or it means the spot market is being bid heavily and it's leaving futures behind, because the funding rate is the calculation difference between spot and this futures instrument, right? Well, contextually, price was going down here, right? This was price was looking like shit right here, and we were seeing funding getting pulled down. So to me, you could make an implication here that without any other data points, there are many other data points you could use, but just looking at funding and knowing their rules and knowing contextually the price action in this range, this looks like shorting to me right here. These look like shorts, and then they were correct. And then a bunch of longs got closed out on the way down here, which also helps to pull down the funding rate. So Jay Broadway, I hope I gave you some information to think about there. I hope I answered your question. Sometimes I feel like I ramble when I answer questions. Do I sell a course? No, but I have been thinking about putting together a bunch of concepts into like some kind of packaged way for people to consume more easily. But I haven't made decisions about any of that stuff. And no matter what, I'm going to keep making YouTube videos. So. What do you think about Will's aggregated spot premium over perps and Coinbase spot premium? Yeah, so DG, I'm pretty sure that whatever Will wrote, and I haven't looked at it. I actually been meaning to go look at his script. I'm pretty sure that it's this thing. It's his version of it. There are many of these. I didn't invent this look at futures. This is just my personal way of looking at it. But I think it's something like this. And if you go look. There's a lot of indicators that already do this for you. If you just go look up like perpetual swaps or Bitcoin premium or anything like that, there are other indicators, and you can try 2 or 3 of them out. And if they all look kind of similar, you just pick one that you like. D7R. I'll just tell you guys listening right here. If you want to go add some indicators in TradingView that are good, look up D7R. This guy right here is a trader, and he writes he writes good indicators, I would say. They're useful. Now, his code isn't always shared, but not everyone cares about the code. But but he has a lot of indicators and they're pretty useful. You can try out some of them. He's got one here that's Bitfinex longs versus shorts. But I think the thing that Will made is basically his version of this. He's looking at premiums, and I actually have a couple of indicator versions of like premiums that like this one is just Binance that I made a while back, and it's just Binance versus Coinbase. You can see if I zoom out, this is just Binance, right? Binance has been below Coinbase almost nonstop in the year 2022. Here's 2022 right here. There was like a period at the beginning of January, a couple of days. Oh, this is on a 2-hour chart. Sorry. Where are we? 2022. Here we are. Yeah, just a couple of days here where it was actually above, and the premiums have been heavily negative now for a long time. And when you see that, see, look, you can see here the premiums were positive near the all-time highs, and then they flipped negative back here. And the premiums, in a way, are like the canary in the coal mine for the funding rate, in a way. Now, the peg that Binance uses, the 0.01% peg, kind of messes that up a little bit. But in a pure sense, the premiums are just the difference between the prices, right? The difference between futures and spot. And the funding rate is ultimately the calculation of that difference on an 8-hour basis. So you can see this and then later see the funding rate behave in certain ways. So like the funding rate was positive and then it went negative, and around the same time as the premiums. Why did you quit Glassnode? Well, I mentioned it in near the end of a video a couple weeks ago. And it was just because we just had different visions of this year and what it would look like. They're a wonderful company, and I would love to continue working with them more in the future. But we just had different visions of what this year looked like, and I want to continue making this content here and having, time to myself and whatnot. And I didn't feel like I would have enough time to do all of that stuff and make good on my commitment to them with what they were wanting to do. So I felt it better that I not be the person that does that with them. Catching up on chat here, seeing what everyone's up to. Got a lot of folks in here. We got Bill. What's up, Bill? Cultivate Crypto. Rahul, what's up? Michelle. The institution's presence in the market is setting and will set a higher floor for the bear phase compared to previous times. I think that's true. I think that, and this is something that maybe some other TA types might disagree with me on because it disagrees with fractals and with history. But I don't think that 80% drawdowns are likely for Bitcoin in the future unless the entire market is doing that. Like generational Great Depression kind of crash. That's a black swan. So I'm not going to talk about the likelihood of that. But just in a general sense, I don't think it's possible at this stage for Bitcoin to sustain an 80% drawdown. There might be a day of massive liquidations with the perfect criteria of funding buildup, of open interest, of price action being like crap, news catalyst FUD. You could see a recipe like we had back here in May. You could see something like this playing out again. It happened in September. It happened on December 4th. We even got a little one in January. So you can see these things happening, but to actually create the kind of drawdowns that we had like back in the old days, back when, like these drawdowns back here, this market was totally different. I mean, part of the reason why Bitcoin collapsed 86% was because the biggest exchange absolutely collapsed. Mt. Gox collapsed right here, like right in this little part of this box right here. That had a massive effect on the Bitcoin market. Thank you for the donation. I really appreciate it. Thanks so much, bud. You didn't have to do that. It's hard for me to envision. And then up here, this market here, this was also very interesting because we had the ICO bubble pop. And on this run up here for Bitcoin, this market was quite different. First of all, derivatives were not anywhere near the scale they're at now. I think that BitMEX had the perpetual swap already. I'm pretty sure it actually came out somewhere in this time frame here. I think it was in 2016, maybe early 2017, somewhere in here. But we didn't have any other derivatives. It was just that. And maybe the CME future came out, I think, somewhere in here. I could have those dates wrong. But needless to say, the market was much thinner. Derivatives were much thinner. And also, during this run up, during the ICO craze, Bitcoin was the denominator for almost all crypto trading because stablecoin usage was not ubiquitous. It was not as widespread as it is now. There were people doing things like that, but a lot of the market was trading some coin over BTC, right? And there was so much activity going on. And really this market move right here was an absolute crystalline, clear, perfect parabola. And I don't think that Bitcoin will see another one of those, barring a white swan event. Yeah, you couldn't short before 2018. Now that also plays a role. And, just to kind of hone in on that point about derivatives, basically like this time period right here, this is when we've had institutional money coming in here. We've had more and more futures products. Like BitMEX's dominance really started tapering off around here, and we started seeing Binance growing and Bybit growing, and OKX was really big in this period. Their quarterlies were huge, their quarterly futures. And so there's a ton of derivatives activity here that simply did not exist back here. Just didn't exist. That has a major effect on price action. And it's a huge market. We're not talking about some little fringe sidecar economy. We're talking tens of billions of dollars. Are blow-off tops now less likely? Well, what I've talked about on the channel before is that this was basically a blow-off top. If we look at on-chain dynamics at this point right here, and I'll show you in just a minute, this run up right here to break this was the previous all-time high, right here around 19K, 19 and a half. We consolidated under it for a few days. Let me clear off my lines. Sorry. Let me make some cleaner lines. That was basically the all-time high from before, right? We kind of consolidated it under it for a few weeks. And then we broke up and we ripped, doubled price. I mean, in one move, doubled price from 20K all the way up to, what is this, 44, 42, right here. And then we had this first quality pullback. And this area right here was the absolute zenith of Bitcoin activity on chain. It was right here. It was not back here, and it was not here. It ended in this big box. And the remarkable thing is that we had this Elon candle right here. Like we started to rally back up into what might have been a retrace rally. I'm kind of interested to see a fib. We put a fib on this all the way down to the bottom. Isn't that kind of interesting? Look at that. So we had this little rally, right? Well, first we had the run up and then we had the pullback, right? Someone was questioning my fib usage in the comments the other day. I just go wick to wick, guys. There's no rule about exactly where I have to place my fib. I just go wick to wick on my fibs. And if you see, this rally ran out of steam right between the 702 and the 786 and actually went and set a new low. And, we didn't know that at the time. But then once you zoom out and you go, okay, this is actually just a bigger move. Well, let me just put a fib on the bigger move then. Well, where did the Elon candle start? At the consolidation at the 786, which would have marked the top of a retrace rally. Right at that moment, right when activity was already falling off dramatically, we had a ton of spending. Long-term holders were spending, whales were spending, miners were spending. The grayscale arbitrage was drying up. All that was happening right here. Bitcoin looked like it had just reached a peak for at least a period of time. And then Elon candle, and what do you know? We rip over the 786 Fibonacci. Let me take off all my little lines here. We rip over the 786 and we never come back. We don't come back until, much later, till in May, after we've already crashed. But I think that's really interesting. And let me show you. Here's some charts, right? This is network activity. And I've shown this to many of you before, so some of you may have already seen this, but bear with me. When people ask this, I like to explain so that they understand. These are active addresses, active entities in the center, and on the right, number of transactions. Now, active addresses is a tricky one because an address can be used by more than one person. It can represent more than one person. But I think that looking at it in conjunction with all three of these metrics, it tells an interesting story. So the absolute peak of network activity, if I zoom in on my chart, I'm going to zoom in on just the rally of last year. The absolute peak of network activity was right here. Which spot was this? Literally this spot right here on the price chart. That's what we're looking at, right? That was the peak of network activity, and then it just went sideways. And we had the Elon candle, and it kind of sustained some active address activity. But then we had this day in April, which was the Coinbase direct listing, April 13th, April 14th, somewhere around there. And that was the actual top until October later that year. And then we saw a burst of active addresses here, which represents spenders. These are people selling out of their positions. That's why you suddenly get a spike of active addresses here. But the trend had already broken down to the downside. If you look at active entities right here, look at the peak. Where is it? Exactly on that pullback. Rip up to 40K, quality pullback. Here's the Elon candle. Here is the height of active entities. It's never even come close to it again. If I zoom this back out so you can see the last 2 years, look how low active entities is compared to where it was. Just like I showed you on my chart a few minutes ago. Over here, this chart, this is the same data point, active entities, as this line right here. Look at the peak. So this is almost like a parabola, right? If you look at the transaction count, same thing. That was the height of transactions, fallen off, never come back to that point again. And if I go, let me show you active entities long term. Let me zoom it out, put a bar chart on here. Okay. So it's hard to compare the last few years to the first few years because of exponential growth, but we'll zoom in on this market right here. Now, what's interesting is the bear market of 2014 and 15 didn't see active entities fall off a cliff, right? It reduced and then it started rising again into the bear market, which is kind of interesting. Very early days for Bitcoin. So I don't want people to get too wrapped up in thinking that this has to be the fractal we look at. What's really interesting about this, the actual data point is the run up and then the fall, the run up and then the fall. These represent heightened amounts of entities on chain and then a reduction in them. Now these values are a lot lower than the ones we're at now, but you can still see it, right? You can see the wave, you can see the crest. This is on let me actually make this exactly the same. There we go. If I move up to the 2018 market, look at that. This is a little more indicative of the current market than the old days for Bitcoin. But look at the ramping up of active entities. Look, it peaks literally at the top and just falls off a cliff. Same thing that we got here. Most recent market, run up to 40K. That's the top, pulls back, Elon candle, another burst of active entities, and then it just falls off a cliff. Besides blockchain backer and Glassnode, who or what else do I pay attention to in this space? That's a good question, Alice. So I actually, as time has gone on, I look at less and less of other people's analysis because I feel that it impacts my own. But there are, I obviously read what Checkmate puts out from Glassnode because he is a colleague of mine and I greatly respect him. I think he's the GOAT. So I read and listen to what he puts out because I find that he and I are often looking at similar things, but I tend not to look at his stuff right when it comes out because then it'll affect my analysis, right? Uh, Most of the people that I listen to are people that I feel like their TA is better than mine. They understand economics better than me because I feel like I have a good grasp on the on-chain space right now. And not that I can't learn more, but I feel like that's a place where I really want to focus on what I'm seeing and then compare it to others after that. But where I get signal expertise that I outsource, um, blockchain backers TA is really good. There's not a lot of people out there that I think are doing really good TA. I think Pentoshi does really good TA. And I think that Crypto Cred and Don Alt do really good. They're the technical roundup guys, and they do really good TA. But they look at things the way that I do. They do more zoomed out. They're doing monthly levels and they do weekly levels, and it's all horizontals. That's the way that I look at it. Whereas people like Blockchain Backer, their specialty is fibs and fractals. And I'm trying to learn more about fibs and fractals, but I'm not quite there yet. So I look to him to kind of get inspiration from those things. But most of my alpha these days comes from economists. People like Lynn Alden, like Luke Groman, like Jim Bianco, like Felix Zuloff, Grant Williams, the Macro Voices podcast. Those are the places where I get a lot of my alpha these days because it's been so relevant to what's going on. So do I understand correctly that in case we reach 56K, the chances the price will go down to 29K is huge? I want to characterize my answer correctly to you, Roman. So huge, it's a decent chance. It's a decent chance. I mean, rallies stall out all the time at the 702, right? I mean, it happens all the time. And oops, that's not a fib. And so, this is just the most recent one right here that I drew. And on my channel, on my last produced video just the other day, which you can go see if you go to my channel, that I showed about a dozen examples of where it can fail. So yeah, there is still a very real possibility that no matter what form this rally takes, whether it goes straight up or whether it does this, and just creeps and creeps and creeps and creeps, whether it's down, up, down, up, down, up, down, up, as long as we stay in this range here, when we get back up to this level, there is still, I would say, a very reasonable possibility. I would probably give it 50-50 just right now. I'd have to see what the market looks like when we got there. But there's at least a very reasonable 50-50 shot that that's the top and that we then come back down and set a new low, which would be, down here. People don't really want that, but it happens. Every metric is bullish except the price. That's not true. There's plenty of metrics that are bearish. I was just showing a few that were bearish. Active entities is bearish. What people I think might get confused about with on-chain being bullish, quote unquote, to use your words and to use other people's words. I'm not picking on you, Trust, by the way. I want to get this point out. There are things about on-chain that are showing bullishness, but that does not mean price has to react, right? There can be tight supply dynamics, which we've had for an entire year, and price can still go sideways. Ryan, thanks for coming in, man. Appreciate it. How long have we been going here? Going for about an hour and 15 minutes. Everyone having a good time? Or is this been good? Has this been useful? Is there anything that I haven't really looked at that I think that people are wanting me to cover today? Because I didn't come on here with an agenda. I just kind of wanted to hang out, talk to y'all, look at the charts, answer questions, etc. So let me think. There's a couple other things that I was looking at earlier. I'm just going to kind of pop through my charts and just kind of see. This is one thing that I thought was pretty interesting. BCP was like, here's $10. Now post a video and take all your viewers. Savage. Absolutely savage. So this is pretty interesting here. I was trying to look at long-term and short-term holders in loss because I feel like looking at supply and loss can sometimes be more valuable than looking at supply and profit, just because Bitcoin has so much supply and profit. And so this middle chart on here is showing sovereign supply in loss. Now, sovereign supply is long-term and short-term holder supply, basically. It's all the Bitcoin that is not on exchanges. Long-term holder supply plus short-term holder supply plus exchange balance equals all of Bitcoin. So if you take out the exchanges, you've got long and short-term holders. And that supply that they own as a group is shown here. And interestingly, the amount of supply in loss for both of those groups is about the same percentage of sovereign supply. It's about a 1.5 difference. But if you look at short-term holders in loss compared to all short-term holders, and you look at long-term holders in loss compared to all long-term holders, it's very different. So the supply off of exchanges, the amount of it that's currently in loss is about split evenly between hodlers and newer investors. That's what this chart on the middle is showing. But the bottom is showing you that short-term holders as a group by themselves, 85.5% of them are in loss, but only 17% of long-term holders are in loss. That's pretty interesting to me. It's really showing you who is absorbing all of this pain right now. And if you look back in the market in the past, long-term holders in loss are almost always less than short-term holders in loss. But there's periods where long-term holders have experienced more pain. And right now, it is heavily imbalanced to short-term holders. These people have seen nothing but downward price action for like 3 months. So the amount of pain that they have weathered is significant. And I suspect, let me look for my price support chart, and I suspect that if we start creeping back up here, the short-term holder cost basis right now is 47,300, right? It's come down from 53.5 or so when it was broken in early December. We're about 3K below their cost basis. All of these short-term holders that are in loss that we were just looking at right here. And so I'm thinking that maybe something to be watchful of, in addition to retrace levels and moving averages and all of that stuff, we also need to watch out for short-term holders who may provide sell pressure as we get back to their cost basis, because that's what they do. If I show you, where is it? Where's P&L coin destruction? Here it is. If we go look at short-term holder spending, look at it on a daily chart for the last 3 years. No, yeah, with let me do a 7-day moving average. Yeah, so short-term holders, their cost basis is represented here on this black line. And what we can see when they get underwater, they can spend considerable periods of time underwater here, unable to get their spending levels back into a state of profit. As the newest holders, their cost basis is tethered to price more closely than long-term holders. And we've seen, this is just their spending. This isn't their aggregate being in profit or being in loss. Let me show that one. That one might actually be a better way to look at it. Let me see if it's this one. This might be a good way to look at it. Yeah. So I'm watching to see when they get back to their cost basis. This is just their current profit and loss ratio, unrealized profit and loss ratio. And you can see that as we've been rallying, short-term holders have been creeping back up towards break even. When they get to this black line, they will have just as much supply and profit as in loss. And I expect that price currently is what did I just say? 47,300. It's this orange number here at the top. So you can see short-term holder cost basis. It's this orange number right. So when we get back up to that level, I am expecting some spending to come out of this group, some amount of it. But what will dictate the rally continuing is if spot demand stays high and if derivatives don't get too over-torqued. How effective is NUPL, net unrealized profit and loss, in determining bull cycle tops or bear bottoms? Let's go look at it. Let's look at it together. This metric is pretty interesting. It's really just the standing unrealized profit level of the network for anyone watching that doesn't know what this is. You can see the description down here. The difference between unrealized profit and unrealized loss. Unrealized meaning it's currently standing on the network. There's some colored bars here, which are not connected to anything scientific. They're just kind of a way to interpret the values that you see on the chart up here. And when this value breaks down into the red zone, which is below 0 on this chart, that means that the network in aggregate is in loss. When it gets up above a 0.5 here, then the majority of them are in profit. Or no, that means that's not exactly what that means. That's what it would mean if they're back over 0 here. It means they're in 50% profit. But I think that looking at it from a cyclical perspective can be useful. But one thing that makes this tough to use going into the future, by comparing it to the past, is Bitcoin's latent supply. So there are always going to be elements of supply that sit in a forever state of profit that are never accessible by humans ever again. And there's some of that supply being lost on a monthly basis. It's not always large amounts. But now, after 13 years, it's estimated that 2 or 3 million coins are permanently lost. Now, that's hard to factor into a metric that shows lifetime profit and loss in some kind of a cyclical ratio like this. That's why you see these peaks getting shallower and shallower, in a sense, is because there are some profit that's sitting back here that is lost, that will never be moved again, that unless price falls to $10, will always remain in very high levels of profit, which pushes this metric up, which raises the floor of NUPL. So I think that it's useful, maybe on smaller time frames, meaning like maybe just a few years. It can be useful as a comparator to what was an overheated, so to speak, profit level from the past. Like you can see, it kind of touched this 0.8 level. But if we go back in time, all the markets before broke over it really cleanly. And you can even see this metric is showing you diminished returns in both ways. It is compressing, right? The bottom is rising and the peaks are getting smaller. So over time, this is going to narrow more and more. Oops. So that's why NUPL, it's not that it isn't useful, but I would not look at it for absolute values. I think that a lot of these on-chain metrics are more useful in a rate of change, a relative rate of change angle, than any kind of absolute values. Some of them are based on absolute values, but not this one, in my opinion. But I think Bitfinex 120K BTC would be something to worry about. No. So the Bitfinex coins were moved from the hacked wallet, conceivably because the feds seized them. They were moved very publicly without any kind of like privacy measures. I'm pretty sure that the feds have now seized all of it. They may return some of it. I don't know what they're going to do, but I don't think that the Bitfinex coins are anything to worry about for the average investor. No. 94K BTC was what they seized. Yeah. The 120K is actually what was hacked. So this is only like 3/4 of it. Some of it I think that my understanding is that some of those coins that were hacked are believed to be in circulation now, that they were washed into regular circulation and now are not unrecoverable for the people who had them hacked from them. What's useful is the trend change, not the actual value. Right. That's what I'm doing a lot of times when I look at on-chain. I'm not looking for a metric to hit a certain point on the chart. I'm waiting for the trend to show a reversal or to show some kind of signal. That's like really what is going to tell me, like the health of the network and all that kind of stuff. All right, so I'm going about an hour and a half here. Probably going to wrap it up here pretty soon in the next few minutes, unless we get like a wave of questions or something like that. You guys doing all right out there? Anyone have any questions about what we've been talking about so far that I haven't answered? I've tried to answer as many as I can. I told my wife a husband is like a fine wine. We just get better with age. The next day, she locked me in the cellar. That's pretty funny. I'm going to scroll through my charts here because I opened a bunch of tabs and I want to make sure that I mentioned everything I wanted to mention to you guys while you're still hanging out and watching with me. Okay, so here's one thing that I thought was pretty interesting. This is relative transfer volume by size, right? I'm going to actually open this into its own screen. So this is pretty interesting because what it's showing is in the last, couple of years, big money is really moving a lot on chain. So this is relative transfer volume by size. So it's transactions of certain dollar amounts. Now it goes without saying that as Bitcoin rises in price, the dollar amount of transactions naturally rise in a relationship with it. But what we're seeing now, that doesn't explain why we are seeing a huge amount of $10 million plus transactions moving on chain every day. Now, this is entity adjusted. So from Glassnode's perspective, they have identified entities on chain. Many of them are known and can be seen in Studio, which are the different exchanges, the different miners, things like that. Entity adjusted means that any transaction that takes place between addresses of an assumed entity are just ignored. So Coinbase moving $50 million of Bitcoin between their wallets doesn't show up on this chart, which is one of the ways you would try to invalidate this. So, well, these are just the exchanges, right? Well, no, the exchanges are entity adjusted and they're not part of this chart here. So this is other activity. And this green bar here are transactions between $1 and $10 million. And this is $10 million plus. And you can see it's really been elevated basically since we created the 40K all-time high at the time price in January 2021. And it dips and it rises and it dips and rises. But this regime of large transactions on chain, I think it's pretty encouraging. I think it's a sign that there are bigger players settling economically on the base layer. Some of them are known to us. Some of them are not known to us. Some of them are custodial institutions like Fireblocks, like Copper, places like that, which we don't have all of them, forensically identified on chain. But I take this as a positive that we're seeing more and more large transactions each day and that value is sustaining itself. Checkmate told me there were issues with the heuristics from FTX. Yes, those have been resolved. That's why sorry, that's an old habit. When FTX was launched on Glassnode, that was the sign that they had figured those things out. If perps are trading above spot, funding rate will turn negative. If perps are trading below spot, funding turns positive. So basically, yes, but it isn't that cut and dry. So we've had a neutral funding rate for much of this drawdown, but the perps have been trading below spot the whole time. It's just that there isn't enough leveraged shorting to pull the funding rate into a sustained regime of negative funding. Let me go find my funding rate. I know I have it in here somewhere. Did I close it? Here it is. So what we got in the June, July era here, I don't want to look at Binance, look at all exchanges. Okay. So when we got in June and July, this is like a sustained regime of negative funding. And when we were seeing this, it was happening at the same time that open interest was rising, right? So price is going down, open interest is slowly rising, and we are maintaining a negative funding rate. And that was a sign that the shorts were the reason that the funding rate was negative. But sometimes funding can go negative, and it's not because of the behavior of the people in the market. It can mean that it's because the perpetual price is below the spot price, but that can happen in a liquidation. You see how this funding rate dipped really hard right here in the actual sell-off on May 19th? So when that happens, when longs are closed out, the closure of their collateral becomes a sell order, right? The same way that a short closing out becomes a buy order. So when you close a long, it becomes a sell order. And that becomes, in a liquidation event, a bunch of sell orders hitting the market at the same time. And what that does is it shoves the price down really fast. And it shoves the price down so fast that it far outstrips the actual prices in the spot market, and you get a massive negative funding rate for a very brief period of time. It's almost like you pulled the rubber band back so hard, and when it snapped the other way. And that's kind of what you see here. And if I go forward in December, I know I'm answering your question in a few different ways, Jay Broadway, but I want people to understand this context of the funding rate itself. We had this in December 4th. This was December 4th. You see that? And you see how the funding rate was very elevated going into that period. These are people holding long positions from the top, and they got liquidated so hard, the funding rate fell all the way down, and then it quickly settled back up into this level. But you get these quick moves down, and that is from tons of closure orders hitting the futures market, shoving the futures price down far below the spot price, which is not seeing, where, Coinbase is not seeing those liquidations. They're coming from futures. I say Coinbase, but you know what I mean, any spot market. If I go back to March of 2020, there's another one of these events. Here it is, look. This was the March 2020 crash. And there were so many liquidations. This is not people going giga short. These are long liquidations shoving the futures price 0.3% below, in the aggregate, below the spot exchanges. Yesterday, Checkmate mentioned market realized gradient oscillators. Yeah, I would love to talk about that real quick. Let me pull one up here. So there are a few, there's 3 of these. I'll explain one of them because they get posted a lot, and I'll probably start using them now a little more often. I haven't shared them yet because they require some explanation. But these are momentum oscillators. Okay, they're called market realized gradients. If you would like to see a free version of this, let me show you the free one. Okay, we're gonna go to checkonchain.com. Go to checkonchain.com. This is Checkmate's personal website. He is the person who produces the Glassnode Week on Chain newsletter. He is my mentor and friend, great guy, has awesome data on his website. If you go here and you go to the realized section, he has these things called market gradient oscillators. There's 3 of them. There's a 14-day, a 28-day, and a 140-day. I'm going to open a couple of them here. Okay, so here is the 20-day. This is a momentum oscillator based on Bitcoin, the market cap, and the realized cap. So the market cap, as you know, is supply times price. It's the sticker price to buy the entirety of Bitcoin supply in one transaction, right? The realized cap, which is on this chart as the orange line, is the price that every coin last moved on chain. We've talked about this on the channel. There's a video very recently, a couple weeks ago, where I did a deep dive into the realized price. I'll try to remember to put that in the description of this stream. But realized price is essentially the cost basis of the network. And the reason this oscillator was built was to show the relationship, the growth rate between the market cap itself and the realized cap. So what makes the market cap go up is people buying spot Bitcoin, right? People buying it off of the exchange. It gets Bitcoin gets repriced higher. And when the price goes up, the market cap goes up because the price is the market cap times the circulating supply. So we know what makes number go up for price, and we know what makes number go down for price, buying and selling. What makes the realized cap move are transactions on chain, people moving coins from a time in the past, in the present, and having those coins be repriced at a higher price, at the present day price. That moves the realized cap. So this momentum oscillator is trying to show you periods of time when the market cap is rising relative to the realized cap, faster than the realized cap. When the realized cap is going up quickly, it's representing a lot of coins are being repriced, often indicative of high spending, coins being spent from the past at lower prices, now at newer prices. The repricing raises the realized cap. If you look in the bull markets, realized cap rises quickly. And then it kind of goes relatively sideways in bear markets because you don't have a lot of coins being repriced from the past at higher prices, right? Does that make sense? It's just kind of a sideways range. And so then realized price goes sideways. When market cap is rising faster than realized cap, buying pressure is outstripping the realized cap inflows, the repricing of old coins, which often ends up putting a top in. And when the momentum of the realized cap is rising faster than the market cap, that is more of a bearish signal. So I say all of that to show you that this oscillator down at the bottom is measuring that force that I just explained. When it's positive, market cap is rising relative to realized cap. When it's negative, either realized cap is growing negative to relative to market cap, or it's not rising, or market cap's not rising as fast. The way to interpret this during bull markets, if you look at the parabola, if you look at this parabola here, note how on a 28-day basis, now there, like I said, there's also a 140-day, and it's important to look at all three of these for confluence. You don't just pick one of them. But this is showing you that on a monthly basis, the momentum of the bull market was increasing with each pump higher, right? You can see how it keeps setting higher highs. This is the kind of oscillating behavior that you'd look for. And you'd look for the reversal on the pullback, the reversal back to the positive, back to the break even. That's kind of the signal that momentum has shifted back to the positive, that the sell-off portion of that period of the market has completed, and the market cap is again rising relative to the realized cap, which again happens from buying, right? So if I move this forward, this time series forward, and bring this price chart down here so we can look at it. Here we go. You can see how momentum in 2020 was kind of bouncing around, and it very quickly set a peak here. It set a peak at the all-time high break in January 2021 that we've now looked at a bunch today. And you notice there was a pullback. There always is. It's an oscillator. It always oscillates. But what it did on the way back up was it set a lower high. The momentum didn't continue to grow the way that it did in this bull run. You see that? It set a peak and then immediately set a lower high. And then it started setting lower highs. This is a sign that momentum has fallen off the network. And over here you can see again on the two pumps up, look at that momentum rising, falling, rising, making a new high, and then falling and then never returning. That's kind of a sign that momentum has fallen off the network. This is how you interpret this oscillator. It's purely a momentum play. It's based on the two most fundamental things about the Bitcoin ledger, the supply and the realized cap, the two like fundamental on-chain metrics. This is the 28-day. There is a 140-day. Let me reset them a little bit here. There's a 140-day, which is based on, he had a 14-day, and I think he just made one that was 10 times as long. Right, so we got a 14-day, we got a 28-day, and a 140-day. And you try to look for confluence between them all. If I go look at it right now, let me just zoom in on it right now. Look at it. This is the 14-day. The 14-day is pretty noisy. This is probably not that useful for people unless they're making some like little trade. I don't tend to look at the 14-day very much, but I do look at, excuse me, I look at the 28-day and the 140-day. And, you know, with the, let me pull my price chart down. There we go. See my price. There we go. And so with the 28-day, we've now seen momentum is actually broken back here to the positive on a 28-day basis. And the 140-day is now reaching back to break even. So if this now breaks up to the positive, typically, if I go back in time and you look at the price chart itself, like, look, I'm going to take all these off. Look at the price chart. It is colored based on when that oscillator is positive or negative. Look at the green and the red. It's pretty accurate, right? It missed, the 140-day missed this first part of the rally, but it successfully warned you that January was going to be ugly. It was a little behind. But that's why you also look at it in conjunction with the 28-day, which if I zoom out here, a little too far, you can see it's also pretty accurate. It tends to catch much of these positive moves. It's not perfect, but look, it caught this little move here. It caught that the market was running out of steam in April. It caught the September washout. It said, this is no good. You need to get out here. It caught the end of November's rally. This is no good. You need to get out here. And it's now flipped green again. So maybe we get a little momentum. Maybe it sustains itself. But as we were talking about at the beginning of the video, what I'm currently looking at are retrace levels up here. And it's very possible that this rally could go on and on and on for a couple of months, get up into this level, and sentiment would be at an absolute fever pitch. It's going to be insane. People are going to be talking about 100K and 200K Bitcoin because we'll be so far from the lows. And when sentiment becomes that bullish, it seems like it's very strong, but it's actually at its most fragile. So I think that is a very real possibility for Bitcoin. It's something it needs to be watching out for because the 702 and the 786 kill rallies all the time. Watch my last video for a dozen examples of that. The reason it's important to pay attention to derivatives is because they can be the cause of major volatility. Yes, and also because sophisticated traders play in that space. There are a lot of apes in futures that go gig along at the wrong time. You know, that always happens. If we go look at our funding rate over here and we go look at the most recent all-time high, there's a bunch of people who went gig along at the all-time high. Look at that. That happens. But because of the sophistication of futures, because people can hedge their positions and take delta neutral arbitrage positions and all the sophisticated ways people can interact with futures, and because it can continue to grow regardless of what happens with Bitcoin, it can do its own thing. It's something to continue to watch. And in these kind of environments like we've had for this part of the year right here, where spot demand has been very low, as we talked about, where spot demand is very low, it's important to then make sure we're paying attention to derivatives. Enrique, you asked about the S&P. Not sure what you're seeing there, bud. We can go look and see what the indexes are doing today. Oh, it looks like the S&P is a little green. You know, I had this chart. Where's my chart? Sorry, what was I looking at earlier? I had my, here it is, my correlations. So I was looking at my correlations. So this is Bitcoin, right? And these other three are the NASDAQ, the Dow, and the S&P. You can see the names up here. Since the bottom on January 24th, Bitcoin is running away with it, right? Compared to legacy markets. You can see, look at that decoupling, short-term time frame decoupling since January 24th. So like 2 weeks of decoupling. Bitcoin's up 31%. The indexes are up 6 and change. I saw someone talking about this yesterday, but I had to laugh because this is a perfect example of choosing the data that fits your narrative. This is since January. Right? You know, if we measure it from the bottom, just from right here, Bitcoin looks like it's crushing it. But if you just look at the year 2022, everything is the same. It's just that Bitcoin did this really unnecessary dance and then came right back up to the pack. I just thought this was funny. It's just people pick and choose the data they want to look at. And if you're trying to paint a bullish Bitcoin picture, then just look at it from the lows, you know? But if you just zoom out a little bit, you can see it's you know, basically since the all-time high, it hasn't been doing that well. All right, everyone. We've been going for an hour and 45 minutes, and I need to wrap this up. I really appreciate everyone coming to hang out, though. This has been awesome. I know I've just been kind of sitting here rambling. I hope that this was valuable. I hope that I answered some questions. I'm going to be traveling tomorrow, and I will be in Mexico for about a week. I will try to make a video while I'm there. I'm going to take my microphone. I'm going to take my laptop. I will try my best to produce a video while I'm there. But if I can't get the audio to sound good, if I can't get my lovely voice to sound good, I might not produce a video. And maybe we'll do a live stream or something else. I haven't decided because I don't know what the internet situation will be there. And a live stream really needs quality internet. So I'm hoping that I can make a video next week. I'm hoping that I don't go 7 or 8 days with radio silence because that no one wants that. I don't want that. Need more of these interactions. I will do more of these. And I didn't come with a big agenda today. I'll if anyone has feedback for how to make these live streams better, I'd love to hear it. But I definitely will come with an agenda more often than not. But today I just really wanted to do this, knowing that I'm about to travel. I just wanted to have a chance to talk with you guys. You need to be alive with me and Check doing shots of tequila. I will be hanging out with Checkmate in Mexico. Yes, we're doing a little on-chain getaway. There's going to be a handful of us that work on this stuff that are going to be hanging out together for a week, you know, picking each other's brains and having cocktails with little straw hats. Yeah, Broadway, I'm really interested in Twitter Spaces. I think that they're a cool environment. The one negative is that you can't do visualizations on Twitter Spaces. People would have to come to YouTube to see it. But I like Twitter Spaces because they're really easy to spin one up, and you can just get in there, and suddenly you got a few hundred people in a room, and you're just talking. You know, so I think I'd like to start doing some of those more often. Maybe I'll do a couple of those from Mexico. If I can't get a video working, maybe I'll try to do a couple of spaces and we can just kind of shoot the breeze. Maybe I'll get some on-chain homies to join me. Hey, Matt, what's up, brother? Good to see you out there. All right, everyone. It's been almost 2 hours. I'm going to pull the cord on this. We'll post it. It'll be live. You can watch the replay. I don't know about a Discord. Just to kind of answer your question there, Broadway. I'm not too keen on having my own Discord, just because I don't know if it would bring a lot of value, as opposed to me doing my analysis out publicly and like that. So I'm not sure, but it's something to think about. Thank you. Yeah, if you have any questions or comments, feedback, whatnot, leave them in the comments below to this video, or you can DM me on Twitter. Make sure you are following me on Twitter. If any of you aren't yet, I don't know how you're not, because I say it in every video, but make sure you follow me on Twitter at TXMC Trades. I do have an Alpha Beta Soup Twitter, but I don't tell people to follow that because it's not where I put out my content. But I do have an Alpha Beta Soup Twitter that you can follow if you want. But mostly follow my main account, TXMC Trades. That's where all my videos and things will get posted into the future. And yeah, hope you guys are doing all right. I'll be, like I said, I'm traveling tomorrow morning, and then I'll be in a tropical location for the next week or so. But we'll keep watching this market. You know what we're seeing. We'll see what's doing today. Are we getting a rally here? Looks like some of the metaverse tokens are kind of taking a hit. SHIB is still doing well, which is just sad to me. I can't believe this token is pumping. XRP is almost 90 cents. Look at that. Look at that. It's getting up there. Getting up there, but still got a lot of work to do. And there is a lot of supply sitting right here. So $1.05 to $1.35 might be tricky. Anyway, Bitcoin's still looking good. I don't necessarily think that this rally is the one that will take us to all-time highs. Just to kind of encapsulate my thoughts, I don't necessarily think we are doing this. My base case now is still kind of a this and then a this. Something, you know, some kind of sideways walk up here and then kind of trickle back down. That's currently my base case. I don't think that we're making new all-time highs in this rally right here. But that's it. I'm going to let you guys go. I've been talking forever. Chat's getting a little quiet. It's 1 o'clock in the afternoon here. It's time for me to make some lunch. Take care of yourselves, friends. Hope you're having a great day. And yeah, we'll chat again soon, all right? Cheers, everybody.